wants to help you. So Charlie Williams is that kind of a community mortgage specialist who, takes the time to work with first-time home buyers. And so he's here to share with all of you. And again, put your name in chat. And if you have a question also, you can put that in chat. Thank you so much. Charlie, it's yours.
All right, thank you, Larissa, and thanks everyone for attending on today. So as Larissa said, my name is Charlie Williams. I'm with BB&T, now Truist. That is still our official name until next year. However, I have been in the mortgage industry for about 7 or 8 years now, and I've been with BB&T for 3 years as of last month. And I have a passion and a desire to assist home buyers, potentially first-time home buyers and people that are looking for down payment assistance. And so upon taking my new role in March, it is my goal and my desire to, reach everyone that I can. All of my clients have my personal cell phone number. And as Amy mentioned earlier, it's important in regards to the people that you have on your team. And Amy, I want to say to you as well, that was a phenomenal story. Thank you for sharing. And unfortunately, I didn't have the pleasure of meeting you prior to, but congratulations on your new home. But as a community mortgage specialist, is my job and my duty to ensure that everyone has the opportunity to learn about home ownership and potentially purchasing a new home.
You
So
waiting on
with that being
someone?
said, I'm sorry. Okay. With that being said, prior to the meeting, we had some questions to come in. So I'll just kind of go over the questions and, give you my response. And then when we're finished with the question, we'll have another question and answer session where if we have enough time left, I will answer those. If not, at the end of the meeting, Larissa will send those over to me and I'll make sure that they all get answered for you. So we'll just start in the beginning. So the first question was, how do I find out about different programs that offer financial assistance for down payment and closing calls? Well, the agency, your counselor, and who referred you, and the lender you're working with will let you know what programs you may qualify for and what down payment assistance that's available to you. So as I understand, with the program, you'll kind of go through with the counselor. They'll kind of look at your financial situation, kind of let you know, what you can do, what you qualify for, and then when you're ready to purchase a home, they'll send the information to us, and then at that point, and preferably me. And just to let you all know, I'm actually the only community mortgage specialist with BB&T and SunTrust, now Truist, in the Raleigh-Durham Triangle area. So yes, I help several different people, but I help at different times. And I just try to make myself open and available for, everyone as they're going through the process. But to answer the question, that's how you find out. And so then the next question was, what are the income ranges to qualify for HUD, subsidized, and what kind of subsidies are there for down payment and waiving points? So to answer that question, the down payment assistance program typically uses 80% of the area median income, which is which is determined by HUD. And the income is based on the county that you want to live in and how many people live in the household. And so with that being said, we have different programs, different grants that actually give you different down payment assistance options. And with those, we really don't charge any fees or anything of that nature with that. So, we do have, like I said, several different options that are available to you. We just have to have a conversation, kind of determine what it is that you're looking for and how we can help you with your goal. And so once we have the conversation, then I'll send you a pre-qualification application, and then we'll get started on the process to tell you everything that you qualify for. All right. And then another question was, how do you apply for first-time homeowners grants? Well, basically you let the lender know. So you would, once you contact me, you'll let me know that, you want to use down payment assistance and that you're a first-time home buyer. And the first-time home buyer is defined by someone who has not had a mortgage in their name in the last 3 years. And so you just call and say, hey, Charlie, I'm looking to purchase a new home. I wanted to see if I can get some down payment assistance. What can you help me with? And at that point, I'll let once we go over everything, what you qualify for. And once we determine what you qualify for, then I'll say, okay, well, I'll put together a pre-qualification letter for you. It will kind of outline, the terms of the loan. It will tell what, the maximum sales price is, how much down payment assistance that you're going to be receiving, and then what your actual loan amount would actually be. And then the next question was, how much money should I have saved up in order to purchase my home? I've been told that people are purchasing without any money. And that is correct. You can purchase money with no money down, but as Amy stated earlier, the market is pretty hectic at this point, so it's pretty hard. So you want to make sure that you go in with your best offer. So if even if you're offering, $2,000 down for due diligence, that's money that you're putting down, guarantee that you're going to proceed with this particular offer on this home. Then you sign the sales contract. Homeowners and things of that nature that are selling their homes, they are more likely to, maybe accept your offer if you have, a good amount of money as far as the due diligence. We're going to help provide you the assistance with the down payment. And I love what Amy said, because I tell all my clients this, especially in this market this day. And also write a letter, let the seller know that you're serious about buying this house, why this house is best for you and your family. And, hopefully they accept your offer. All right, and let's see here. All right, and the next question was, what percentage of total house or land cost should we try to save for a down payment? Well, in a perfect world, the standard percentage down is 20%. So 20%
Yeah, he
down
got
of
the kind of one.
however, you can purchase a home with a minimum of 3.5% down. And then if you are getting down payment assistance, usually we have several different products, but most of them I've seen coming in, giving clients, it puts them at about 10 to 15% down. So it puts you in a good position kind of going in initially to establish the mortgage. And then the next question said, I would like to know everything I need to do from beginning to end. How long is the process for home buyers? Well, beginning to end seems simple, but it is a little complex. So the beginning is you kind of determine your budget. Then number two, you contact your lender and get pre-qualified. Once you're pre-qualified, you enlist a realtor. And then the realtor at that point is going to take you to show you homes. Once you find the home that you want to place an offer on, you place the offer. Once the offer is accepted, then you turn the offer letter back into the lender. And then at that point, that starts the clock of the application process. The application process could take anywhere a minimum of 30 days up to 45 days. And depending on what type of loan or what type of product we have to put you in, it could take a little bit longer, but the average is usually about 30 to 45 days. That's pretty standard in the market. And then once we have everything processed for you, our underwriter will make the final decision to ensure that the loan is approved. Once the loan is fully approved by the underwriter, we start to celebrate, and then we start gathering all the additional documentation to get you ready to go to closing. At closing, you'll go to your attorney's office or your settlement agent, sign the paperwork, and on that day, we really celebrate, because at that point, you get the keys for your new home. So seems very a small piece of information, but it is a very complex process. But in the end, you understand exactly what you're looking to do, and then you obtain your goal. So let's see. The other question here was, we possibly qualify for a VA loan. Do you have any information for starting that process? Well, as far as a VA loan is 100% financing. So the VA will finance your property at 100%. Um, there are some differences where that's concerned. If you're disabled, there is a funding fee for a VA loan. If you're disabled, the funding fee is waived. And again, it's 100% financing. With a VA loan, you do have to have some money set aside because you do have to pay for some appraisals and inspections up front. And so those are things that you would actually pay for initially up front. But then as far as the overall financing of the total loan, we would do the financing for you. So if you were purchasing a home for $100,000, we'll give you a home for $100,000, but we'll give you a loan for $100,000. All right, and then so the next question is, what is the best way to raise my credit score to qualify for a home? Well, unfortunately, I'm the lender, so I'm not a credit counseling agency. So I'd have to refer you to a credit counseling agency and or the agency that has referred you. They should have some options that would help you with your credit score. And then what type of items uh, should I specifically on my credit report impact my credit score negatively? And then, so that would be referred back to the credit counseling agency as well. And then who could I talk about my credit, the credit scores? I would need to qualify for a mortgage. Um, so if you're going to get pre-qualified for a mortgage, which is typically what you need to start shopping, because most realtors these days require a letter before they'll start showing you a home. You'll want to have at BB&T now Truist, we can only if you have to have a 620 or higher credit score in order to receive a pre-qualification letter. That's not to say that ultimately your credit score has to be 620 to get a loan with us. It's just that we will not be able to produce a letter unless you have a credit score of 620 or higher. And the reason I say that is because as the VA loans and some other type of loans that are available, they will allow a lower credit score. It's just that unfortunately, we wouldn't be able to provide a pre-qualification letter for that. So you would have to just really be upfront with your realtor and the seller and say, hey, I'm a veteran. I'm working to get this loan with Truist, and this is what I'm working with. I don't have the letter to show, but I am in the process of going through the mortgage process to obtain the loan. So unfortunately, like I said, so they would have to have that. And then there's another question. How do I get a loan to pay for land and build a home? So that's called a construction to perm loan. And so basically you would get a loan for a portion of the construction. And then as the process goes on, the bank will pay the builder throughout the process. And then at the end of the loan, you will obtain a mortgage for the total amount that you're actually financing, and you move forward that way.
Hey, Charlie, this is Artrice. I'm going to give you a break and let you take a breather. I just wanted to go back to the question about improving the credit. You have Angela Coleman and Larissa, and they're both the subject matter experts with regard to improving your credit. And so if you have not met with Angela or with Donna at CEF, those ladies will give you a plan to do what you need to do to get your credit up to at least the minimum of 620. So I just wanted to remind everyone, if you've not made an appointment with any of those ladies, Larissa, Angela, or Donna, they would be the ones you want to have that conversation about what you need to do to improve your credit. There are some ways, some things you can do in the short term and in the long term that they can help you with. Okay?
Thank
All
you,
right,
Artrice.
Charlie, I thought you could use a break.
Well, I'm almost at the end now, but thank you. All right, and so the next question was, are there any grants for rehabbing a home that you buy? So currently not at Truist. We currently don't have any rehab loans currently. So the homes that we do financing on at this point would need to be, you know, uh, established and ready to be able to be moved in at this point. So we don't do any rehab loans. If that's something that, you know, you really have to have, it's, you know, your dream home and you have to have it, then I would have to refer you to a, you know, you would want to reach out to another community bank or maybe your credit union. And then the last question, and Larissa is going to answer this question, but I'll just ask the question for her. It says, how do I get assistance with qualifying for a mortgage? I think you're on mute, Larissa.
Larissa, you're on mute.
Angela, did you want to speak to that? Or, oh, I don't see Angela. Okay, so there are a number of programs right now with the North Carolina Housing Finance Agency, and some of them are very flexible. They don't have a lot of requirements on them. They would help with the down payment and closing costs. They're up to 3% down payment or 3% for closing costs, or a combination of those for a conventional loan. And if it's a government loan, you can go up to 5%, but it does raise the interest rate. There's also an $8,000 down payment assistance. And then there's for the 3%, 5%, you can combine that with the mortgage credit certificate. And then one program that Reinvestment Partners will help you with the application is for the $30,000 loan, which can be used as a down payment because it reduces your first mortgage. It acts like a down payment. And then after you pay your first mortgage, then you can pay off that loan. If you've been saving to pay that off, you can just get that off and be done with both mortgages. So contact Angela or I about any of those programs. When you apply to a bank like Truist that uses all the programs, they will let you know what's available. And sometimes they have additional programs. Sometimes the funds do run out by the summer. There's a special program called Federal Home Loan Bank that's also for first-time home buyers that sometimes runs out of money, but that's available up to $7,500. And Charlie, are there other programs that you want to mention at this time?
So when you were talking about the other mortgage earlier, we were talking about the CPLP, the $30,000.
Right.
Yeah. So right now, that's what we're using a lot right now. And then also BB&T has a grant where it will give you up to $7,500. That's totally forgivable at time of closing. So we have a plethora of options that are available for you. You know, like I said, what I like to do is just sit down, have a conversation with you, typically over the phone. Most of the stuff right now is still virtual. We are opening back up a little bit, but still not, you know, meeting face to face right now with clients. But I do a lot of what I do by phone, by email, and through our BB&T Now Truist portal.
That is a great grant. Thank you. I'm sure people are going to have questions about that. I have a couple, and I'm going to start. Ashleta, I hope that this answers your question about programs, but pop something in the chat if you have more questions. And Amanda asked about if, do you need to have a particular debt to income ratio to apply for these grants?
Well, so that, you know, in regards to the mortgage, the debt to income ratio, we kind of start at 43%. And then if you're at, depending on which one you're actually establishing, yes, they do have additional guidelines for the debt to income as well. So what we'll do is once we determine which ones we're going to use, which ones we can use, once I run your application and everything, then I'll kind of see what your debt to income ratio is at that point. And then I'll let you know as far as any down payment assistance programs that would actually be beneficial for you to be able to use in addition to what you're currently getting.
Mm-hmm. And one thing to keep in mind is if you can get these grants or even that Community Partners Loan Pool loan that reduces your first mortgage, or where you're able to put down a higher down payment yourself, then that might lower your first mortgage. So it might, fit within the ratios that most lenders use 43%. Some use 41%, some of the government loans like USDA. Am I saying that right, Charlie?
You're saying it right.
All right. Angela's usually the expert on USDA. And then Tamika has two detailed questions about, do conventional loans require private mortgage insurance?
All right, so private mortgage insurance will be attached to the loan if your loan, if you finance less than 80% of the loan to value of the property. So yes, if say for instance, you get, you don't use all the down payment, or you can only get one down payment assistance program, and it only gives you, like 10% down or something of that nature, then private mortgage insurance is actually added to the loan. And then depending on the type of loan that you get, as long as it's not FHA, then once the loan is less than 80% of the loan to value, the mortgage insurance would drop.
Okay. And another specific question has to do with how student loans are affecting mortgages. Are there requirements in terms of how you count the student loan payment?
Well, right now there's several different factors going on with student loans. And again, it really just depends on, the type of program that we're utilizing as well. So a good rule of thumb, a lot of times, so what I tell my clients, if you do not have a payment and your loan is in deferment, what you want to do is you want to contact the servicer of your student loan and ask them to produce you an income-driven repayment plan option. And what that would do is tell you what your payment would actually be per month if you were paying back on the student loan. And so then if you have that, then we can use that piece of the information to put in for your student loan information to help calculate your debt to income. Because if we don't have that, we use either one or two things. We either use 1% of the balance, which obviously some student loans are astronomical and can be quite high and can cut you out, instantly. Or we could use 0.50%, which is kind of, half of that, but still, depending on where you are, as far as your debts and things of that nature, it still can be a little high. So really just trying to get that piece of information from your servicer would be the best option for you at this point, so that we can know, exactly what to use in the event that once the memorandum and everything is lifted on student loans and you have to start paying it back, we know exactly how much you're going to be required to pay back.
I've actually have the paperwork, the income-driven repayment plan, and I've actively been paying on my student loans during this pandemic. So I know the way they're recalculating it is the 0.050. So I wanted to know if that's what all conventional loans were doing, or if that was just something FHA was doing to look at the DTI of student loans versus trying to get a mortgage payment.
Yeah, so if I'm not mistaken, that's just for FHA is using that portion. But if you have the paperwork, and if you're actually paying it back, then it should report on your credit report. And we're going to go based on the information that's on your credit report. But in essence, typically it's usually about 1%, but the FHA loans are doing 0.50 at this point.
So let me summarize. What you were saying is FHA does 0.5% of the balance of your student loan as the payment, but a conventional loan can use what's on your credit report. They can use an income-driven repayment, but if you don't have that information, you use 1%.
Correct.
So you want to get an income-driven payment set up before you go to your mortgage lender, it sounds like. Okay, we have a couple of other questions. One quick question was, does a Truist or have construction loans?
Yes, we do have construction loans. So we can do, so if you're looking to build a home, and we have several different loans and programs that are available with different builders as well. So if that's something that you're interested in, just get in contact with me and we'll be happy to take a look at it and see what's available in that particular area that you're looking to build in.
Okay. And I may need some help from Catherine about her question. Does a co-signer on your loan help you get a more competitive offer, I guess, compared to not having a co-signer? So how can that help you?
Well, if the question is in regards to like credit or something of that nature, whenever we decision the actual loan based on the credit score and things of that nature, we're going to base it on whoever has the lowest credit score. So usually where a cosigner comes into effect is if you cannot income and credit qualify on your own. But if you need some additional income to qualify for a higher amount or something of that nature, then as long as the cosigner has similar credit and or better credit than yours, and they have, the income that can be used, then we would use their income to help qualify you for the mortgage.
Hey, Charlie, let me ask this question in relation to that. Does the cosigner, does this have to be their residence as well?
No, not necessarily. So they don't have to live in the residence, but it just, we would just need to know, situationally who would be on the deed and title and things of that nature.
All right. I think I have some more questions. Sorry, I'm running a little behind here. Oh, I have some great links here. And someone is asking, can you put your contact information in the chat? I think that's really for you, Charlie. So let's take questions from the audience, and then before the end, we'll give you time, Charlie, to put your contacts in the chat. And then
Okay.
a couple of resources that Eliza has put in the chat, which is the link to the Duke Homebuyers Club. You can just Google Duke Homebuyers Club and find all kinds of resources, including the partners that Atrice mentioned, Reinvestment Partners and Community Empowerment Fund, and past programs, as well as a link, I guess, to programs from the NCHFA, which we've mentioned has a lot of programs in addition to what the lenders offer. Or
I see a raised hand. Amy, do you have a question?
Yes. You want to unmute and ask your question?
Yeah, thank you. I don't think that I had a question, but I did want to mention, because there were some things about getting approved for like some of the programs, and Larissa and I talked at length. It turned out that I didn't actually qualify for some of the programs that I thought I would qualify for initially, like the down payment assistance program and stuff like that. So it actually helped for me to go through my finances with Larissa and also with Angela to really clarify what I was eligible for and what I wasn't. And Larissa just knew them. Like, I tossed out the numbers and then she turned around and spit it back out at me of like, you qualify for this, this, and this. Because I had gone through a divorce and had been on the title, even though I didn't purchase the home, I was no longer a first-time home buyer. And I didn't know that until I started my new home purchase process. And so that was actually a surprising shift for me, because suddenly I didn't qualify for a lot of new home buyer programs. So what ended up coming to my advantage was the fact that my income was less than 80% of average income and median income in Wake County, which is where I live. And the fact that and that made me feel even more encouraged to like really stick to my guns on my purchase price and what I could afford on a monthly basis, because I didn't want to overload my monthly income. And so I really encourage everyone to, go through it feels tedious and it feels really hard to go through those numbers with Larissa or with Angela or with any of them, but it's really helpful. And then on the other side of that, then when my mortgage lender came back to me and said, oh, you've got this much saved for your down payment, but hey, I can give you this point, this percentage point, or I can give you more on credit towards your down payment. I looked at the percentage, the rate, and I was like, well, the difference is 2.9 or 2.8. And I'm like, but what I really need right now is more money on the front end, less cash up front, right? And so my lender and Angela and my agent were able to help me think through the logic of what made the most financial sense at that point. Do I trade percentage point on interest with money up front, cash up front to help me get the house in the first place? And that's what I ended up going with, was like, you know what? 2.9 and 2.8 are really, really good right now. So I'm not going to sweat that. And I'm going to go with just getting the extra up front that I need, the breathing room I need to actually buy my house. So it was good to have the partners with everyone to just talk through those details, even as we're like getting into the weeds of the purchase.
Okay. Who else has a question?
I'll just say something while before someone asks a question. Amy brought up a good point. Right now, there's a real housing frenzy, and you probably are already aware of that people are buying houses above asking price, and it may feel very frustrating for you, and you may be tempted to offer or buy a house higher than maybe Larissa and Angela have recommended. Think about that, because you don't want to work for a house. You want to work to live. And so you must think through what you do so that you don't overextend yourself in a mortgage just because you're ready to buy a house and you think this is the step you need to take. So I just want you to think about that. This is a really hard time to buy a house. There are fewer houses available, and those that are available, every time I talk to somebody about buying a house, they talk about people offering $30,000 and $40,000 above the asking price, and sometimes the houses are sold and have 10 or 20 offers on the table. So it is a really hard time. I'm not a sugarcoater. It's a tough time to buy a house, and it's even a harder time if you're in a certain income category. As Amy indicated, 80% or below area median income. And so it's going to be hard, but what I don't want you to do is say, I'm out there and buy that house, because what will happen if you overextend yourself is that you're going to be struggling for a much longer time. And you want to buy a house, it's a good investment, but you don't want to overextend yourself. The other thing that Angela will tell you, and I don't see her on here, don't go out and buy new cars and furniture in anticipation of buying a house. That's a big no-no too, okay? So I just have to put that out there because these are important things to say. If you've never bought a house before, you may not think about it, but everything you buy impacts your debt to income, and it also impacts your credit.
Do you have something to add? Oh, we've got someone else. Go ahead. Okay, I guess, Charlie, do you have something to add? Do you have the do's and don'ts? Oh, you're muted.
Yeah, so I think Altrice kind of covered, the major things, because like she said, a lot of people don't realize that, when we initially pull your credit for the pre-qualification, that's that one time, and it may be, you know, 80 to 120 days before we pull it again. So if there's, new collections, new credit on there, we're going to question it, and we're going to want to know, we're going to want to know about it. And depending on what it is, it could be the factor of, you was able to get the house 60 days ago, but now it's the 90th day and now we can't qualify you anymore. So it's very important to continue on the path that you're doing with saving and paying your bills on time and all of that. And I would say the biggest key for me as well is just to kind of keep me in the loop of everything that you're doing financially. I mean, I know it sounds a lot and redundant, but if I know about it, I can go to bat for you, opposed to not knowing about it and getting to the closing table or getting to the day before closing, and then we pull your credit and something's on there, and then we're like, we can't do anything, and you've made all these arrangements for furniture and moving and all of that, and unfortunately, it can't be done. So just be cognizant of that. And I'm going to go ahead and post my information in the chat. And if there's any more questions in addition to this, then Larissa can email them to me, and I'll be sure to try to get you an answer and get those answered for you.
So I thought I saw LG Stylo coming off chat. If you don't mind, direct message me your name so you get credit for this hour towards your home buyer certificate. And if you have a question, let us know. Anyone have a question? Got it. Thank you very much. So I just wanted to let you know that we're going to continue in this series of helping people buy homes with a real estate agent who loves to work with home buyers. And we have a half dozen of them on our list because first-time home buyers need a real estate agent who really works hard for them and who really is dedicated to helping first-time home buyers, because it does take longer. They don't make as much money. You don't have tons of money, but they really do it for the joy that, of helping people buy their first home. And so we hope you experience that joy yourself as a home buyer, find the right agent for you. If you need names of real estate agents, let us know. If you need names of actual individual loan officers, so you can contact those individuals that really like to work with first-time home buyers, let us know. Let's see. I have a question about working on credit, I think. The name of the person to contact with credit. I think that Angela, who's here, she's a credit expert at Reinvestment Partners. Donna's good at that. Donna Carrington is good at that at Community Empowerment Fund. And they also have that 15% match of your savings if you complete the 8 financial education classes.
I see a raised hand. I think Tia has a question.
Great, go ahead.
I was looking at the Reinvestment Partners website, and I wanted to verify the pre-purchase counseling. If I do the intake application, will that be directly with you all? Because I want to try to get started, but I don't know where to.
Yes, that's the best way to get in touch with us, is to do the intake application. If you need any help with it, Rosa Manrique that application. And then we can work with you one-on-one, either Angela or myself or Rosa will be working with you. And all of our services are free. Our counseling services are free to everyone, and these home buyer classes are free for Duke employees. So please encourage people to do both the home buyer classes and the one-on-one working with one of us at Reinvestment Partners, and or work with Donna at Community Empowerment Fund. It's Donna at communityempowermentfund.org. Or you can go online and get their phone number or refer yourself. I'm seeing lots of chats. Oh, everyone's making sure they're getting their credit. Okay. I think I got everyone's names now. Thank you so much. So any questions about anything related to home buying?
I have a question, if that's okay.
Yes.
So first of all, I'm new to Duke, and the first thing my supervisor did was like, hey, if you're interested in home buying, join this group. So I'm glad she recommended it. But I am also a single parent of one. I have previously in the past, I've gone and talked to a loan manager, and I know income wise, I'm where I need to be. I do have to reduce my DTI. So I have been working on that while the student loan is on moratorium. But I do have a question. So my student loan is one of those ridiculous amounts that you referenced before. So even if I get my DTI down, with my student loan being that high, and I'm in good standing, I pay it even though it will probably never be paid off. Does that really, I mean, how much bearing will that hold if I can get everything else where it needs to be? Because my student loan is sort of like I think about almost the range that Miss Amy was saying she wanted her house to be. You're muted.
So the student loans can be a barrier, but generally, if it's an income-driven repayment, it should be a relatively affordable payment. And if, as you say, you're working on getting all the rest of your debts down, that's great. And so that, might do it for you. But this is exactly what we sit down and talk with people about. What's your income? What are your debts? What's a plan to get your debt to income down to below 43% and lower, and have also an affordable home payment. So that's what we're working towards, is something that's comfortable for you, and hopefully you will find that house that will fit within your debt to income ratio. Charlie, do you have, or anyone else have questions or suggestions? Okay. So does that answer your question?
Oh yes, it does. Thank you.
And one thing that I run into so much is that people who are working at Duke, which is a nonprofit, may be able to get student loan forgiveness. So after 10 years, the loans go away. And it's something you have to apply for every year. People have tried applying and been unsuccessful in the past. And I try to help them connect with Duke Personal Finance. If you go to Duke Personal Finance and you go to Contact Us, you can get a free session on dealing with student loans. I think it's called Loan Questions. And that's specifically student loans because so many people do. Oh, and Eliza has put personalfinance.duke.edu. That's their website. And it's definitely worth the time to talk with them and, you know, learn about the programs that you're eligible for. And then there are even groups out there that are helping people keep your applications going in every year on time. So, you know, you don't miss out on that forgiveness. Let's see. We have some more information from Eliza. Eliza, what is the YouTube?
So personal finance, there's a Zoom we did last year where they reviewed the educational loans. Personal finance came and did it, and it's a recording of that presentation. So somewhere to start and perhaps go from there to ask more questions, or the other way around.
Duke also offers, you know, they do the employee matching with retirement benefits through Duke, and then that's all managed through Fidelity. And so there are Fidelity financial advisors that will give you advice completely free of charge. And so long before I started talking to Angela and Larissa about buying a house, I actually did an appointment with someone and said, okay, here's my budget. Like, yeah, okay, retirement, blah, blah, let's not, like, that's one thing. But then, like, here's my goal of, like, I need to buy a house, and here's the path I've charted out for myself. Is this right? Am I missing anything? What do I need to think about? And they were able to also give me advice on how to improve my credit score and help me decide whether or not that planning, that path was actually a solid, you know, based in reality kind of path. And they will do that for anyone. There's no income requirement to meet with them. They're just a service that Duke provides as one of our benefits. So sometimes I think people think, oh, well, if I'm not doing retirement, or if I'm not talking about retirement, or I'm not doing an IRA, then it's like not a big deal. But they actually have lots of other resources. So that was really cool for me.
Thank you for reminding us that Fidelity does manage the retirement funds. And I think any Duke employee that, you know, has retirement with Fidelity, even if you don't have money with them, you have the opportunity to talk with them. They're not there to sell you anything. They're there to provide information, and you can make the choice whether to, you know, put your retirement in. Oh, there was a question, will this be recorded and available on the website? And the answer is yes, when Eliza has time to do that. It usually was pretty quick. So please share it with other people, the link to the Duke Homebuyers Club. Eliza says yes, it'll be available next week. And we had a new person join us. If you have a question about home buying?
That was Angela. She popped
up.
Oh, yeah.
My phone kept going in and out.
All right.
I don't know who Rosetta Taylor is, but if you have a question, let us know. All right. Oh, we are past 6:30. Any last words? All right. I do want to say one thing. I'm jumping in. Sorry, Angela. Amy did say something. I've had home buyers who just hit a wall because they just can't find a house. And sometimes you just need to take a break and, you know, just regroup, restart, or just rejuvenate the search, and you will eventually find the house that, you know, works out for you. Angela, what did you want to say?
I was going to say that letter, I've had a couple of people who told me that the letter was the compelling reason why they
Angela, you're frozen, so I'm going to jump in there. Amy also mentioned writing a letter to say, you know, you're a home buyer, you're going to be living in this house, you're not in it, you know, to distinguish you from the investors, because I think people like to sell their homes to people who are going to live in them and appreciate their homes. All right. So I'm going to just put reinvestmentpartners.org where you can find our home buying, we'll find our housing counseling program and our pre-purchase program for home buyers if you need help with that. And you can also go to Community Empowerment Fund to get help as well.